Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us here at Ausbiz. Let's get across what happened overnight. Now, investors turning cautious following the relief rally in global markets with a fragile ceasefire holding between the US and Iran. Crude prices, they seesawed as markets wait for Iran to reopen the Strait of Hormuz. But investor sentiment improved during the session on Wall Street, with Israel saying it's ready to begin peace talks with Lebanon that would also include the disarming of Hezbollah. Major US stock indices rebounding from an earlier dip, with the S&P 500 moving back above both its 100 and 200-day moving averages. Well, consumer discretionary stocks are among the best performers, boosted by Amazon after it revealed that its AI services at its cloud computing unit are generating annualized revenue of more than $15 billion. Software stocks suffered as fears over disruptions from advances in AI returned, with enterprise software developer Atlassian falling heavily, along with human resources software provider Workday, Photoshop maker Adobe, enterprise cloud firm Salesforce among those to fall. Also, cybersecurity firms were caught up in the sell-off. Applied Digital shares, they dropped 8% after the data center operator's third quarter net loss widened from a year ago. And Tesla advanced on reports that it's developing a new, smaller, cheaper electric SUV. And shares of Corona beer maker Constellation Brands surged after posting a small and expected drop in fourth quarter sales. Well, Israeli Prime Minister Benjamin Netanyahu has said he's seeking direct talks with Lebanon as its attacks on Hezbollah risk derailing US-Iran talks planned for this weekend in Pakistan. But there's no sign Iran has lifted its near total blockade of the Strait of Hormuz, which has caused the worst disruption to global energy supplies in history. Meanwhile, in the US, the Personal Consumption Expenditure Price Index increased 0.4% in February. That's the largest increase in a year, reflecting strong price growth of recreational goods and vehicles, as well as clothing and footwear, while the cost of fuel jumped 1.4% in anticipation of the war. And economists expect inflation to have surged in March, with the CPI forecast to be 1% higher on a monthly basis. That inflation report set to be released tonight. And US fourth quarter GDP has been lowered from 0.7% to 0.5%. US Treasury yields, they're slightly lower. The 2-year slipping to 3.78%, the 10-year at 4.29. Australian 3-year government bond yields are above 4.6, the 10-year just below 5%. And the US dollar index was down around 0.33% on the day. The Aussie has climbed to 70.8 US cents. Well, oil prices remain volatile as the fragile Middle East ceasefire holds. However, prices rallied into the market close as Saudi Arabia said its oil production capacity had been cut by around 600,000 barrels a day. That's 1/10 of Saudi crude exports. That's due to attacks on its energy infrastructure. Well, Brent crude futures settling up more than 1% at close to $96 a barrel. Gold gained around 1%, supported by a weaker US dollar. Spot gold trading at around $4,760 an ounce. Copper's little changed. Iron ore fell almost 3% to 106 US a ton. And Bitcoin is trading above 71,500 US dollars. Well, joining us now is Mugunthan Siva, India Avenue Investment Management, who, Mugunthan, you have just returned from India, in fact last month. What, a 3-week tour there. What was the purpose of that visit?
So we do this once a year, essentially take Australian investors, potential investors, over to India to have a look at the story themselves and make their own judgments on whether it's structural, whether it's cyclical, whether there are impediments, whether perhaps there are things they haven't considered as part of their view on India as an inclusion in part of their portfolios.
I'm just taking a look at the latest estimate from the World Bank in terms of the Indian economy. So they've raised growth predictions for the 26-27 fiscal year to 6.6%, and saying that GST rate cuts, they're going to be boosting consumer demand. How effective is that likely to be, do you think?
Well, we've already seen since the cuts were rationalised late last year, that we've seen significant boost to consumption through autos, cars, motorbikes, where perhaps the cuts were most significant. So that the Indian government's focus was, whilst there were going to be some challenges on the export front, some tariff headlines, that perhaps the best thing to do was to focus on local consumption to push the economy.
At the same time, they warn of those headwinds from the Middle East crisis. Are we seeing that there at the moment? Primarily it's energy prices, isn't it?
Yeah, look, we were there in the eye of the storm when all this was unfolding. So, there were discussions around some restaurants shutting down because of trying to restrain the use of energy, some concerns on infrastructure. But I think one of the major thematics really was the resilience that India is building. If I look at 20 years ago, fossil fuels were about 90 to 95% of energy usage. Today that's come down to a still significant 75, but there's change towards building more resilience and less emphasis on the impact fossil fuels can have on the Indian economy. When we look at 2022, oil prices went up, inflation went up, India was impacted, foreign investors exited. However, the resilience was important to note there because once we went through the immediate sort of cyclical shock, then the upside was able to be resumed.
You talk of that greater resilience then. How's that coming about? Is there a bigger investment then in renewables?
Yeah, 50% of the increased capacity that's being added today is going into renewables, typically solar, hydro, wind, and you'll see India increase that. I think one of the areas to focus on if you're investing in India over the next 5 years is really renewable capacity. Now it has to be economic, valuations have to be right, but I think areas like solar are certainly where the government will push and spend money.
What do you see as the investment opportunity there?
So it's kind of unfolding because it's a newer industry. So whether you play it directly or whether you play it through ancillaries, which probably have a more stable business around being supportive to the renewable infrastructure, that's really the decision to be made.
Now also, as far as exports are concerned, what is the latest just in terms of those trade deals, both with the US and the EU, with exports actually on the rise?
Yeah, so India signed a trade deal both with the EU and the US. Obviously, what's happening today is disrupting that, and that's been put on the back burner. But quietly, India's export targets are the growth area of the next 5 to 10 years. Essentially, building sectoral champions like in auto ancillaries, specialty chemicals, pharmaceuticals we've discussed many times, is where India's growth and operating leverage will come from going forward.
So, Mugunthan, how is your own fund there at India Avenue performing?
Yeah, so obviously the first 3 months of the year were significant mark-to-market. Part of that was Australian dollar rallying and being strong against the rupee in the midst of this issue, and also the Indian market pulling off. Mark-to-market losses in the first quarter for investors in India in Aussie dollar terms would be close to 20%. We were obviously exposed to that as well. The way we've tried to structure our portfolio is a barbell towards local consumption, as well as some of the export industries like pharmaceuticals and IT services.
Can you give us a sense of those companies you're invested in the fund?
Yeah, so there's a company called Aurobindo Pharma, for example. It's the largest exporter to the US of generic pharmaceuticals. We like that story because whilst valuations have been a bit challenged and there's been price erosion in US generics, the long-term positives as we roll into a patent cliff gives these companies that can produce en masse at a much cheaper price a real opportunity to grow into those markets, particularly with less tariff pressure that's emerging through these deals done.
In terms of industrials, so you invested in Mahindra as well?
Yeah, so Mahindra is a great local consumption play. It's also a play on rural because they are 40% market share in tractors, which is the largest in India. They have got their SUV and EV execution right. Their capital allocation has been good. New models. India's really had a strong push towards SUVization as such, or premiumization. And their EV models, to be honest, the Mahindra car of 10 years ago was a bit tinny and purely focused on low value and being cheap. But if you look at the cars today, even the ones that are on the road in Australia, they're certainly equivalent of their peers.
And overall, what are you seeing with earnings growth expected into FY27?
So prior to this crisis, we would have expected that earnings growth is building up towards 15% plus for FY27. With the crisis, obviously it's going to have an impact on margins and holding back a little bit of private capex. So we think earnings are going to come in closer to 5 to 10. So the market sell-off is really an adjustment to that slower expectation in FY27. Now, how long that lasts remains to be seen as to what happens this weekend and the next few weeks.
Mugunthan, always great to get a snapshot of what's going on in India. Thanks for joining us from India Avenue Investment Management.
Thanks, Andrew.
All right, let's take a look just ahead of the open here. What is expected? Checking out the S&P ASX 200 futures, down some 8 points. So once again, because we had a fairly flat finish yesterday on the market, investors maybe just stepping to the side, trying to work out what next as far as this ceasefire and the conflict in the Middle East is going to deliver, with that ceasefire, of course, remaining very fragile at this point. So stay with us. The open, just a couple of minutes away.